Hi there guys, hope you guys are well. It's Easy Fix FX here, back again with another cracker of a video. So I just want to explain quickly guys the RSI, what it actually is and how to use it correctly. So most retail traders, as you know, when the RSI goes oversold below the 30 level, they will buy the market looking for a reversal. And when the RSI goes above the 70 level, retail traders will look at to actually sell the market to catch the reversal going down. But as you can see here, in a case like most of the time when the RSI goes, in this case, below the 30 level, the market usually 90% of the time it actually carries on. Because what the RSI actually is, it's a momentum indicator. So it's measuring momentum and volatility in the market in a particular direction. It's mainly measuring your actual volume and momentum. So it's telling you where the market's actually headed aggressively, in which, the direction in which the market's headed aggressively. So we can see here that in this scenario, the market dropped below the RSI dropped below the 30 level and the market carried on going below. We can also see in an uptrend. So I like to use this strategy on the 30-minute time frame. So you can see how the RSI went above the 70 level and the market carried on shooting up. What you should wait for is the close of the candle. Never enter while the candle is still in action. It's way better to actually enter once the candle closes, because the candle, when the candle's open and moving, it can easily go in either direction. So it's very important to wait for the candle to close. Another thing with this strategy is that it usually happens on a breakout. So you can see in this example here, we had a high over here and we had a low down here. And you can see over here, as soon as the RSI went above the 70 level, so it broke out of this box, or this breakout zone, or this breakout box. We can see also in this previous example here, we had a low in place over here and we had a high in place over here, and we can see the price broke outside of the box or the zone, so out of the breakout zone, and we can also see the RSI went below the 30 level. So it's happening. It's useful for breakout traders if you are a breakout trader. So you can see over here the RSI went above the 70 level and the market carried on shooting up. It broke out. So you can see here we had a low in place over here, and we also had a high in place over here. Like over here on the left, there's the low. You can see over here the RSI went above this, the candle closed above the 70 level, which would have been probably this little candle over here, and then you could have entered on the breakout. So it happens over and over and over and over and over again. Here's another example here, guys. We have a high in place. We have a low in place. We can see the RSI broke above the 70 level and the market broke out completely to the upside. So it basically happens all the time, guys. So what I'm trying to say is do the opposite of what of retail traders are doing. As you know, 95% of retail traders are losing money in these markets. So you have to think outside of the box and do the opposite of what retail traders are actually doing in order to make money in these markets. Because remember, the market makers also know exactly what retail traders are doing. They know that retail traders use the stochastic. They know that retail traders use the RSI, and they know exactly how retail traders use the RSI and the stochastic. The same thing happens with the stochastic, but I prefer to use this strategy with the RSI. So we can see over here as well another short example. We have a low in place, we have a high in place. So if we're looking for the breakout over here, we saw price broke out, and at the same time we see the RSI dropping below the 30 level, indicating momentum to the downside. So it's pretty common on breakouts. You can use it on breakouts. It happens all the time. Here's a high in place. Here's a low in place. RSI goes above the 70 level. Okay, and the market carries on going up. So it just happens over and over and over again, guys. So study your charts, guys. Look, all you need to do is study your charts and think outside of the box. Trading isn't difficult, guys. You just got to use good risk management and use the correct strategies. That's why I teach all my students the correct strategies in my course in order to kill the markets every time. How to be financially free just from Forex and from trading. I teach you guys exactly what to do, when to do, and how to do it every single time, every day of the week, in order to make money and be successful and achieve financial freedom in these markets. So as we can see here, guys, another one, we have a high in place, we have a low in place. RSI breaks above the 70 level. All the retail traders are shorting the market, but we start buying the market and we make money going up. Okay, guys, so I hope this video helped and I hope you make money in the markets with this strategy next week. Just always use good risk management, guys, with whatever strategy you use, because risk management is ultimately the thing that's going to make you money in these markets, and it's going to save your account, and it's also going to make you money. So God bless, guys. Have a good week ahead.